So, without further ado, let's delve into the presentation. And a quick question that I want to ask people to think about is, who is Sally? Um, I will contend that Sally is the bane of any strategy within an accounting firm. But unfortunately, Sally is often the most common strategy that we see when we go into accounting firms. And so rather than who is Sally, it's probably better to ask the question, what is Sally? And Sally is the same as last year. And unfortunately, too many accounting firms fall into the trap of, well, this is the way we've always done it. This is the way we grew previously. This is how we've processed transactions. This is how we did billing. This is how we've collected money. And unfortunately, accounting firms are probably one of the slowest industries to change, to adopt new methodologies, whether it's training people in terms of how to do an audit, or as I said, in terms of how a tax return moves through the office. Sally is what we often fall back on, and the same as last year really has to stop, because it was Einstein that said it's the definition of insanity is to expect a different outcome doing exactly the same processes. So what we want to do today is really make sure that we're moving away from same as last year, and make sure that we're looking at every aspect of our practice and making sure that we ask ourselves, is this the most efficient way to do it? I know that what got us here, for some people will have worked, but for other people, we have to say, okay, what got us here will not get us there. And it's an interesting book by the same title, What Got Us Here Won't Get Us There. We've got to look at what are the things that we need to change to make sure we stay relevant, to make sure we're growing, and to make sure we're still making money as well. So I would like everyone to make sure that today is the last time we utter the words, well, this is the way we've always done it, or this is how I've done it in other firms. Let's look at how we can change those methodologies to really improve processes within the firm. So let's ask the question, what is strategy? I've got to be honest, it's not that difficult. Strategy is a plan towards a goal. At the end of the day, let's not think it's this really difficult 4 or 5 day process where we have to go up into the mountains and sing Kumbaya with everybody. Strategy is deciding on a goal and creating a plan to get there. And the best thing that we have to think about is we've got to keep it simple. Let's keep it as simple as possible, and that's what the goal is today, is to look at how we can analyze our practice to say, what are some of the strategic initiatives we're going to look at this year to get us closer towards our goal. And when we look at the definition of strategy, that's all we're looking at. It's a plan towards a goal. So before we delve into the strategy aspect of things, we've got to ask ourselves, where are we now? How are we currently performing? And we've got to look at it from the financial perspective, from all the components of the firm. Where are we now? But not only where are we now, but how did this current situation come about? What were the activities that we've been doing? What are the behaviors that we've been exhibiting that got us to this position? Some of those behaviors are good, some of them are bad, but what are the behaviors? And let's lay it out all on the table to find out where we currently are. Once we know that, once we've had a good look at where we currently are, we've got to then look at what is our target, what is the ideal state. Now, for many people, the first ideal state comes in terms of percentage growth. That might be one target. But we can also look at other areas that we can target. It might be the number of hours worked. It might be the number of new clients at a particular dollar value. It might be a particular service line that we want to offer. We don't always have to say what is the ideal state being 10% growth. And if we don't hit 10% growth, then we missed our mark and everyone's disappointed. So we can be looking at other ways in which we can define the ideal state. So do think about what is important to you. For some people, it will be revenue, profits, and those financial metrics, and that's fine. For other people, it will be the number of hours worked. For other people, it will be how many the types of clients that they're working with and the type of business that they're doing. But once we have identified that, and some people call it that magic wand, but I think that's probably that puts it a little bit too far out of reach, that if everything was perfect, this is what the ideal state would be. The ideal state can be just 10% better than last year. And what is 10%? It could be 10% less hours worked, could be 10% more profit, could be 10% more clients. Whatever that is, it doesn't necessarily need to be that magic wand, but it does need to be what it is you want to achieve. Because once we know what we want to go, then we can work out how we're going to get there. And when people say that they want to grow 10%, we can then work backwards to say, where is that 10% going to come from? Is it going to come from new clients, from current clients, from new services, from cross-selling to current clients? We've got to then put in plan how we're going to get there and put the metrics in place. So let's look at the situation. Let's ask, where are we now and how did we get here? These are two real key areas that we want to focus on when we're looking at the firm. Let's have a look at some of the numbers that are coming out of one of the benchmarking surveys out there. This is the Rosenberg survey, and what we're looking at here is the average fees per partner for $2 to $10 million firms. And obviously we can spend some time on a one-on-one basis looking at your particular firm, but benchmarking is interesting because it just allows us to examine where we currently are. And you can see the massive disparity between an average firm of $1 million per partner versus the upper quartile, where we're looking at almost double the fees per partner. So there's a huge difference between an average firm and a high-performing firm. And I don't think there's major differences in terms of the type of work that you're doing, but I think there will be major differences between the way it's getting done, the efficiency, the productivity, the systems, the processes, also the strategy involved. One that I thought was really interesting was this partner billing rate. Huge disparity between the upper quartile and the average. But interestingly, this net income per partner, not a huge difference. The average in a $2 to $10 million firm, $332,000, and in the upper quartile, $342,000. I would probably want to have another look at that number because I think that there's probably something's going on, that this net income per partner in the upper quartile, I would imagine, should be closer to about $400,000 in these high-performing firms. I really like this one. I think it's an important one, the ratio to staff of staff to partner. If revenue and revenue growth is something that is important to you, then we need to look at how we're going to enhance that leverage and get it closer to that 9.4 from the average of 4.7. So this is an interesting area that we can have a look at, and as I said, I'll get the slides out to you this afternoon so that you can look at it and have a look at your firm in terms of where you currently are and where you would like to be. And that's what's probably most important, is where we currently are, and then just looking at where we want to be. Where do we want to be in terms of ratio of staff to partner, our partner billing rates, our fees per person? Then we have to look at the area of how did we get there. And what's really important here, and this is a nice resource within the 2020 resources on iShade, is you can go in and each partner or each major stakeholder in the firm should really go through this questionnaire, and it looks at every aspect of an accounting firm, looks at every aspect of the business: leadership, financial, client services, partner shareholder issues, staff issues, systems, and marketing. And what we want to do is we want to go through that questioning process to work out where we feel we're really strong and where we feel we need some work. And what I'm going to do is, as we're talking about this, I'm going to open up one of the first polls. And again, this is all for CPE, just to make sure everyone's paying attention. But let's have a look at what will be your top 2 areas of focus in 2013. So will it be financial performance? Will it be client service and client retention? Resolving partner and staff issues? What about improving productivity through systems development? Or alternatively, another area of focus could be marketing for new client acquisition. So what are your top 2 areas of focus this year? But I would encourage you to go onto the firm management questionnaire on iShade and have a look at all the aspects. There's within each section, there's probably 4 or 5 different questions relating, actually more than that, relating to each section where it says, are we doing well at this? Do we need to improve on it? And how important is it? And so what I'd encourage you to do is deliver this questionnaire to the key stakeholders in the firm. So sole practitioners, you might have a firm administrator that's really key in your practice, so they might get the questionnaire. You might also even give the questionnaire to a partner or spouse and have them go through it just to see what is important to them, because this is really important to say, how did we get here? What was the issue in terms of getting here? So let's have a look. Not surprisingly, it's across the board, but interestingly, 75% of the audience have indicated that they really want to focus on productivity and efficiency through system development, and I think that is really key, and technology is huge out there for us today that will really help us drive productivity, and this is really important in terms of getting over that same as last year, that this is the way we've always done a tax return. We had a phenomenal tax season this year where we really worked hard on changing how we do tax returns when the work comes in. And typically it had been that the work coming in piecemeal from our clients, and we'd assemble it, we'd move it around the office, people would touch it. But this year with 1040 Scan, we wouldn't start work until all the information was in from the client, or as much. I think we set a threshold of about 80% because we knew that some things would come in a little bit late based on previous years. But we were able to get the information in the source documents in scanned and organized, and then the tax return populated very efficiently. And as soon as that was done, we were able to move on to the next section. So we probably cut our prep time by about 40%. And the important thing here was this was every single tax return. There were no excuses. When we've gone out and had a look at firms that have tried 1040 Scan, the ones that they've struggled with it, it's been because one partner has been in charge of it and they've tested it with about 25 returns. That's never going to work because you're not going to get that critical mass. You're not going to get your systems involved. So we've got to look at when we do adopt technology, it's got to be across the board. Let's set that exploratory committee out there to test and make recommendations. But once that recommendation is in, it has to be all the way, because we don't get the efficiencies. When we have done it piecemeal, some parts of the organization are working really efficiently and other parts of the organization are not. So interestingly, that system development is high on the list, and I think that's a good one this year to really overcome the same as last year. Here's a quick poll, another poll question that we're going to do, and everybody needs to give themselves a score. This is the section out of the management and leadership of the firm. And these are the questions that come out of the partner management questionnaire, particularly around the leadership of the organization. So I'd like everyone to go through questions 1 through 10, and I'd like you to rate yourself 1 through 5. 5 is we've got it nailed, all the way down to number 1, this is a challenge. We've got 10 questions there, and then we're going to divide that by 10 to give us a score. So I'll just give everyone a couple of minutes just to go through each of those questions, and then I'm going to turn it over to another poll question just to find out what your response was. Sole practitioners, if you're number 6 there, our partner meetings, even though you are a sole practitioner, I need you to be having partner meetings with the key stakeholders in your firm. For some of you, that'll be your spouse or partner, but I don't care if it's a meeting between yourself and your administrator. There needs to be some level of meeting, of communication of what's going on in the firm, and the same is for the partner retreats. We've got to be sitting down on an annual basis, whether it's just ourselves and key stakeholders, to really analyze the firm. Sole practitioners, this is difficult to do, but you've got to make sure that you do set aside time to think strategically about the business. So, on a scale of 1 to 5, how would you rate your strategic plan? How would you rate your product specializations, industry specializations? How would you rate your ability to differentiate yourselves? What about clear responsibility for managing the firm, even in sole practitioners? Is that clear? Partner meetings, annual partner retreats, the respect among our partners, and let's just say partners, but extend that to say the respect among our firm. Is there a level of respect? And it's interesting, we do go into some firms, and we had the situation that a firm administrator walked out of one of our member firms on April 10th. Walked out of the office to no new job, but you could just tell that respect had been lost, and that sent the firm into a bit of disarray with 4 days before the prior tax, or to the tax deadline. But what is the respect like within your firm? How do you rate the future success of your firm, and how do you rate the overall leadership of the firm? So let's tally that up out of 5, and then divide by 10. And then, folks, I'd like you to enter your score for me, please. What did you score out of 5 for management and leadership of your firm? So we've got a firm coming in at 1, we've got some people coming in at 4, and this is why it's really important to do this questionnaire across a number of people. So I'd really encourage you to deliver this questionnaire, download it off iShade, and I'll put a link in it this afternoon's email with the slides. But I'd like you to download that and then distribute that to the key stakeholders in the firm. And it'll be really interesting to see how people respond. And then once you have people's opinions of where we are, we can have a dialogue about why did you vote for this. It can be quite a confronting process, but as a part of this strategic planning process, it really is important to make sure everybody has the opportunity to give their opinion, and then everybody has the opportunity to validate where we are. So, got a couple of people that haven't voted. They might just be tallying up, but out of 5, how do you rate, or what do the numbers say in terms of how you rate the leadership and management within your firm? So we'll just leave that open for a couple more minutes or a couple more seconds. We've got 20% of the audience coming in at 1. We've got another 20% of the audience coming in at 20%, or number 2, and then looks like the rest divided between 3 and 4. No one giving themselves a 5. Which I'd probably say is why folks are on this call. But let's close that poll now and keep moving. So again, these are just ways in which we can analyze where the firm currently is. So another way in which we can analyze where the firm currently is the practice equation. The practice equation in terms of how do we calculate the net fees collected, and we go back to the benchmark survey of a $2 to $10 million firm. The benchmark or the average is about $1 million in fees, whereas the upper quartile we're looking at $2 million of fees. The net fees collected is a result of the team members multiplied by the chargeable hours, multiplied by the billing rates, multiplied by the percentage billed, and the percentage collected. So again, the practice equation is just another way in which we can have a look at our practice to say, where do we need to focus on? Is it our team members? Do we have some people that we need to get on the bus, off the bus, or move them into different seats on the bus? Is team members an issue for us in terms of getting the leverage that we need to be able to increase revenue? Because unfortunately, there's just not enough hours in the day. The other aspect might be chargeable hours. A chargeable hours down because we're doing too many of the administrative duties within the firm. Now, obviously, some firms with a managing partner, larger firms, they're able to less chargeable hours, but they also have the leverage there that allows them to maintain a high level of chargeable hours across the firm. What about your billing rates? Really interesting. It's really surprising the fact that accounting firms typically do the same work, whether it's the work here in here in San Francisco, St. Louis, Boston, Tampa. You're doing the same work, but we see a huge range of rates. Some of those are impacted by cities, and some of those are impacted by socioeconomic conditions, but it is surprising to see the difference within billing rates across the country. And what I'd like everyone to do now is go on to what will be one of our actually, no, we'll leave the polls for a while because we've done a few of those. But we will ask the question, where do you need to focus, a bit later on. So I'd like you to keep a note of that, where we're going to focus when it comes to the practice equation. We also look at the percentage build. That's a really interesting area to have a look at. And one of the fixes if our percentage build is too low is we have to remove the partners from the billing process, because the partners get nervous when it comes to this billing area. And then finally, the percentage collected. Some firms don't have an issue with the percentage collected. They're on fixed price agreements. They've got everyone on ACH and direct debit and credit card payments, so percentage collected isn't an issue. But we've got other firms which really are stuck in this is how we've always done it. I've always billed after the fact, and most of the time people pay on time. But think about what's going on there. And while percentage collected might be high, what about the amount of time that is being spent with these old practices of collections? Could that time be spent elsewhere by modernizing? It was interesting. I was talking to an attorney recently, and one of the few firms that have moved to this fixed fee, and they don't call them retainers, they don't call them fixed price agreements, they call all of their clients subscribers, and they subscribe to a level of service. And I thought that was very interesting. And the reason that he'd done it is because he was working with a lot of technology companies, and technology companies have subscribers. They've moved their business model away from the buy the CD in the box and then install the CD. They've moved away from that very much to the subscriber, to the monthly subscriber model. And that made a huge difference not only to his cash flow, but also to his level of profitability. They always know how much money's coming in. But it's interesting how we were able to adapt, or how he was able to adapt something that he's seeing in a completely different industry to his practice. And in an attorney's world where probably 95% of attorneys would scoff at that type of a strategy and say you can't do it that way, he's enjoying his best years yet. So we've got to look at ways in which we can change the way we think about this practice equation, the way we think about our team members, chargeable hours, billing rates, percentage billed, percentage collected. So just an interesting story in terms of how other professions are really changing their business model to be much more effective. So what we were focusing on there for the last 20 minutes is where we currently are, because we can't really work on where we want to go until we know where we are financially, by the numbers, but then also the internal stuff of how we got here. And folks, feel free to write any questions that you have along the way. So when we start talking about what is the ideal state, we come down to the interesting aspects of what do you do, how do you do it, and why do you do it? And it's an interesting aspect that most people can answer, what do you do? Most people can answer, how do you do it? But very few within the accounting world can answer the question of why do you do it? Or let's take that back. There's a few folks that can say, why do you do it in terms of compliance? That's the easy answer. But more importantly, why do you do it? And we've got to ask who knows the answers to these questions. Most of your clients, your friends, your colleagues, your co-workers will be able to answer what you do. What do you do? A lesser percentage of those people will be able to answer how do you do it. But it's interesting, very few people, often yourselves included, will know why you do it. Why did you choose to become an accountant? Why did you choose to start your own business? Why did you choose to do what you do? And that's a really important question to ask when we're looking at the ideal state as we define the ideal state. And this turns a lot of business thinking on its head, and it comes from Simon Sinek's first Why, Then What book. And it's a really valuable book that asks the question, let's focus on the why we do what we do. rather than the what we do, because everyone's doing the what. Everyone is doing the same thing when it comes to the actual function of what we do. There's a lot of people out there in the marketplace that are doing what we do, but there aren't many people in the workplace doing the why we do it. So let's take some time over the weekend to ask ourselves the question, why do we do it? A lot of people, and within the accounting space, most people are, how do we do it? They're pretty similar. But there are opportunities for forward-thinking accounting firms to really change the how we do it. And the story of the attorney that has subscribers, not clients, is one way in which he is changing the how we do it. We're seeing a lot of firms move away from that typical charge, bill, collect type of business to fixed price agreements, to monthly subscriptions, and also seeing a lot of firms moving away from the typical year-end work to the year-round work, where we're doing the monthly, at least checking in on the QuickBooks or the accounting systems. We're meeting on a more regular basis. So a lot of firms are changing the how, but not many firms have really articulated the why we do what we do. And it's really important that we focus on the why, because that's how we get engagement with our people. That's how we get engagement with our clients. Because at the end of the day, we want to work with people who share the why. We want people in our office that believe in what we're doing because of the why. So spend some time to say, why are we doing what we do? Spend some time with your partners, with your spouse, with the stakeholders in the firm. Why do we do what we do? And the book, again, just come back to me, is How Great Leaders Inspire Action by Simon Sinek. And it's a really valuable read. And he uses some very valuable case studies. Some interesting ones coming out of the technology world. And here in San Francisco, I have a unique opportunity to see how technology companies operate. Outside of the top, say, 50 technology companies, there are literally thousands upon thousands of tech companies within the Bay Area. And competition for engineers is very difficult. It's very harsh. Honestly, most people think it should come down to money. But I've got a few friends that work in technology with engineers, and they never compete on salaries. They because they can't compete against Google or Yelp or Twitter on salaries. Where they compete is the why. They have surrounded themselves with people, and yes, they've drunk the Kool-Aid, but they have surrounded themselves with engineers that believe in their why. Why are we doing it? Why am I working here for probably less than market rates? Why am I here after 5 o'clock? Why am I here at the weekends working on code? It's because of the why. And it's the why we do what we do, which is incredibly important. And the vast majority of accounting firms, I hate to say it, are missing the why. Or the partners know the why, but that hasn't been communicated throughout the firm. That also hasn't been communicated to clients as effectively as it possibly could be, because most clients of accountants know the what you do and the how you do it, but they don't know the why you do it. So we've got to spend some time really articulating the why we do it. Why we do it, articulate to ourselves, articulate it to our team, and articulate it to our clients. And that's what's really important, because some quotes to come out of the Simon Sinek book are that people buy why you do it, not what you do, because there's a ton of people out there doing what you do. There's not so many people out there doing it for the same reasons that you do it. And the other area is, once we can really clearly articulate why you do it, we're able to surround ourselves with people that believe what we believe. That is really critical. We don't need to sell our services to everyone in the population. We want to sell our services to the people that believe what we believe. And it's a great TED video by Simon Sinek of How Great Leaders Inspire Action, and it's on the website there, and I'll put it in the notes when they come out. But what we want to do is we want to get laser focused on why we do what we do, and then communicate the hell out of that to our people, to our clients, to our peers, to our colleagues, to our co-workers, to our professional network, to our friends. We've got to get passionate about what we do. And I think that passion is sometimes lacking within an accounting firm compared to a technology firm, for example. So first, why, then what? And spend some time this weekend with your partners, with your spouse, with other people in the firm, asking, why do we do what we do? And once we have that in place, it'll make it much easier to do the how we do what we do and the what it is that we actually do. And that's what Simon Sinek says is the difference between the great companies and all the other companies. The great companies focus on the why. So spend some time on that. And again, if you want to talk with myself about the why, talk about the brainstorm different things, then feel free to give me a call. I'm more than happy to spend some time with our members talking about any of these issues. So once we've got that why in place, what we do need to do is we need to look at what is our vision. And I don't want to go into this this process, this visioning process of 60,000-foot view of trying to cure world hunger. But unless we have articulated where we want to be, that ideal state, we've got no place to go. There's no way in which we know how to get there. And I don't care which analogy you use, whether it's a ship, whether it's an airplane, whether it's an explorer. If we don't have a destination, how are we going to know if we're going to get there? And I think that's really missing for a lot of firms beyond our target is 7% growth. There is really no vision of what the firm is going to look like when it's done. So we've got to spend some time thinking about where is it that we're going to be in the end? Where are we going to be in 1 year's time? Where are you going to be in 2 years' time? And it's really important to remember, it's a beautiful song, from little things, big things can grow. So a lesson from the 1 Minute Manager is what is it that we can focus on a small and regular basis, these small, regular, actionable items that will add up to great things. Is it just communicating with people more often? Is it spending time from the 1 Minute Manager to say the 1 minute praises, the 1 minute compliments, the 1 minute meetings? These types of small actionable items will add up to great big things. So it's interesting that a lot of people think this vision process is setting these lofty goals. But honestly, if you just wanted to spend more time with each member of your team so that you could spend some time mentoring them, that can start in 5 minutes a day. That can start with 1 minute a day. So we don't necessarily have to have this massive overarching vision of what the firm has to look like, but we can look at different components of our practice to say, this is what I want my people component to look like. This is what I want my marketing component to look like in 12 months' time, in 5 years' time. Some people will say that the vision has to be what you want the business to look like when it's finished, but I think that's too big, too lofty, and it just really doesn't set us up for failure, I guess, is one way, because when we don't hit it. But when we have these smaller actionable items that add up to big things, it allows us to remain flexible, and it allows us to be able to change and adapt as our client base changes, as our people changes, as our people change, rather. So I think it's better to focus on small actionable things that we can achieve, that we can focus on. So let's have a look at smaller vision statements that are out there. And let's make sure that when we do set up those vision statements, they're smart, they're specific, they're measurable, they're attainable, they're relevant, and they're timely. I spoke with one firm, and they, in their annual performance review, and their goal was they wanted to grow by $400,000 this year. So yes, it was specific, it was measurable, it was relevant, and it was, I guess, timely. But I had to go back and ask the question about whether or not it was attainable. How were they going to achieve that within the time? what was your growth last year? And their growth last year was $110,000, I think it was, off the top of my head. And so I said, okay, so going from 110 to 400, that's a pretty big jump. How are you going to do that? Well, we need to add a certain number of clients. Perfect. How many of those types of clients did you add last year? They only added 4 or 5, adding up to that 110,000. And so it was a really interesting questioning process that made them realize that this $400,000 wasn't attainable given the plan that was in place. And so I said, okay, so we've got 2 things that we can either do. We change the plan, or we have to change the goal. And there's no harm in changing the goal, but let's not set ourselves up for failure from the get-go. And as it turned out, we spent some time talking about it, and we came back to bring it into about $200,000. And I said, would the firm be happy with $200,000 growth? And the firm would be very happy. They obviously would have been ecstatic with $400,000, but they would have been very happy with $200,000. And I said, would it be better to hit $200,000 with a structured plan and then move on, knowing that we've proven ourselves, or hit and hope that we hit that $400,000, and then be a little bit disappointed if we only get halfway there? So we changed what their vision statement was when it came down to their year-end revenue goals. So when you do start setting your goals, make sure we keep SMART in mind, that they're specific, they're measurable, they're attainable, they're relevant, and that they're timely. Create vision statements. In 3 months we will. In 6 months we will. In 12 months we will. Let's make sure they're very action-oriented statements, so that it might be in 3 months' time we will have improved our collection days from 45 days to 30 days. And I think I've got a couple of examples coming up. When we do set our vision statements, be flexible. Always evaluate and update these vision statements based on what's happening in the community, based on what's happening in the socio-economic part of your country, based on what's happening in your office. You know, if someone goes down ill or has to be out of the office to care for a loved one, for example, that's going to impact our vision statements. So let's make sure we're flexible. What I would encourage you to do is let's not delete vision statements. Let's just update them so that we can always look how our vision statements have evolved, and we can look back on it in years ahead to say, what were the outside forces, the inside forces that impacted the change of our strategy. And I think that's really important. And I was reading in Inc. magazine, it was interesting looking at what was, they asked one of the entrepreneur, one of the people that they were interviewing, what are the 3 things that you can't live without? And I started reading that expecting it to be all technology gadgets that kept me productive and efficient and connected. But one of the 3 most important things, it was his leather-bound journal that he always referred to in terms of writing different ideas down, writing his vision statements down, and always going back over them just to see how things had changed. He said that was one of his most valuable sets, was his leather-bound journal. And the question was, what happens if that was lost or stolen? And he said, well, so what? You just go buy another one and start the process again. Because he was constantly reminding himself, he said it would be fairly easy just to keep moving. It would obviously be a letdown, but because he'd been constantly referring and updating and fine-tuning, he would be able just to keep moving along in the right direction. There might be chunks that he'd lost, but that's okay. So when you do put your vision statements, make sure you're constantly evaluating them every couple of months, and then update them on a regular basis. And as I said, don't delete them, just strike them out and move on in the same manner. Maybe a different color, maybe highlight particular pages, whatever you need to do. Some people have it as a Word document or a Google Doc that they constantly refer back to. And the good thing is you can see the progress as you tick things off, because hopefully in 3 months' time you will have achieved that, and so you can just tick it off to say achieved, and then move on to the next one. So once you do realize those 3-month goals, you set the next 3-month goals, you review your 6-month goals and your 12-month goals. So let's have a look at some vision statements that I think are applicable to accounting firms. In 3 months' time, we will have decreased our collection days by 10%, by 10 days. In 6 months' time, we will have increased our billing rates by 15%. And in 12 months' time, we'll have added $250,000 worth of new business to the firm. So all of these statements are smart. Now the good thing is, now that we have written them down and now that the firm, the leadership, everyone in the firm has agreed on those, we can then go into what is the way in which we're actually going to achieve those. How is it that we're going to decrease our collection days by 10%? What are the strategies that we're going to do? And to be honest, that's the topic of our next webinar is once we have spent some time, and that's what I want you to do over the long weekend, is spend some time creating these vision statements, because then on our next webinar, Hope is Not a Strategy Part 2, we'll have a look at what are some of the actual strategies that accounting firms are using to improve collection days, to increase billing rates, to enhance their marketing. That's what we're going to look at the next webinar. But I really need us to, before we get there, we need to spend some time looking internally about what's happened and where we want to take this business. So these statements are all actionable. They are all attainable. And importantly, the firm has agreed that this is what we're going to shoot for. And we've done this process in some firms, and we always do this in 3 months' time, in 6 months' time, in 12 months' time. And it's interesting to see the differences between partners, between stakeholders, when it comes to whether it be billing rates or the adding new business or cross-selling. Everyone has a different opinion of what's attainable. And then it's a very interesting discussion as to how we're going to do that. So let's open up another poll just to make sure nobody's nodded off. What I want to do is go back to the practice equation and ask, this is choose one of the areas below, but what will be your focus in 2013? Will it be getting your team members, getting the team right? Will it be the chargeable hours, focusing on chargeable hours? Will it be your billing rates, your percentage billed or the percentage collected? Where is it that you want to focus on in 2013 that will bring about the biggest bang for your buck? And I think that's another important aspect as well, is we've got to make sure that what we do review or what we do commit to is going to return. The return on investment is going to be positive enough for us to be actively involved. So some folks, for example, might say percentage collected an area, but it may not actually bring about a huge gain in the net revenue. Alternatively, we might be focusing on percentage collected because it's going to help us free up time to focus on the other areas. So that could be the way in which you do make it a core focus for your firm. But again, you just need to think about what's going to get the biggest bang for my buck. We've got most people having reported, which is good, and most people, probably no surprises, are going to be looking at team members. They really want to get their team members right. What I will stress, and I'll need you to think about this over the weekend, in terms of getting your team members right, everyone is looking for the same person. The 3 to 5 years experience, handles clients well, interfaces with clients nicely, is pleasant to be around, is technology literate. Everybody's looking for that person. And there's not many of them out there. So we've got to be thinking about how do we think creatively about how we get our work done. Interesting article out of, I think it was the Harvard Business Review a couple of months ago, just saying that the number of skilled employees is really decreasing. But what's happening is we're able to get a lot more focused administrators and administrative support that are able to come in and support the billable people so that they just focus on billing, and then the admin takes over everything else. So we've got to look at the job structure to say what is administrative that is reducing, for example, the number of chargeable hours. So we've got to think creatively and flexibly about how we're going to work on team members. We can't just work on team members by putting some ads on LinkedIn and Craigslist and hoping for the best. That's not really a people strategy. We've got to be thinking about what's actually happening out there in the greater macroeconomic environment, because those forces will impact our success if we're really focusing on team members this year. So it looks like everyone's reported. Let's just quickly share that. Probably no surprises there. I've got to close, and then I've got to share. Sorry about that. 40% reporting team members, 20% chargeable hours, 20% billing rates, 20% the percentage billed. So let's make sure we have a look at what are the strategies within each of those. And as I said, let's spend some time on a one-on-one for your firm to throw various ideas out there when you need to. Okay, so we've got about 50 or 10 minutes or so, so let's keep moving along. So what we want to ask about is, what is the ideal state? And you'll remember this graph here. These are the financial aspects of it. If you want to change that to the number of hours worked or the number of new clients won, the average value of a client, so that, for example, cross-selling might be an area of focus this year, that's fine. But here are some of the most prevalent metrics that performance of an accounting firm is judged on. So let's have a look at fees per partner, fees per person, partner billing rates, ratios, partner billable hours. If the financial performance is important to you, we've got to look at where we were. Remember at the start of the webinar, we looked at where we were. Then we have to look at where do we want to be. And we've got to keep SMART in mind. We've got to be specific. They've got to make sure we're measurable, and obviously because we're putting numbers down, we're able to make sure they're measurable. And it's interesting that rather than 10%, I want a dollar value, because then I can check every month to know whether or not I'm on track. 10%, it could be 10%, 11%, but if I know that each month I've got to be hitting a certain revenue target to get to my end game, then that's going to make it a lot easier for me to gauge whether or not I'm doing the right things. So spend some time thinking about the ideal state. We've got to keep score. How do we know if we're on track? That's why I said if we know what our year-end target is, if we know what my chargeable hours need to be, if we know what my chargeable hours need to be, if we know what my partner billing rates need to be, then I can work backwards. So with my year-end target and with my number of hours billed, I can work backwards based on previous years to say this is when the work's going to get done. This is my monthly target. This is the monthly target for the firm, and then we've got to share that with everybody. What are the milestones that will tell us that we're on track? During our seminars, I always use the example of running a marathon. We can't just show up on race day and hope that we're going to make it to the finish line. I've got to make sure that I've got a plan in place to get me to that finish line, and that plan starts 6 months before race day. I know that after 1 month I need to be able to run, for example, 5 miles without stopping. After 3 months I need to be able to run 6 miles without, well, 6 miles probably not, maybe 10 miles. And I know that a month out from race day I need to be able to run 22 miles in one sitting without my body breaking down. And at any point, if I'm not hitting those milestones, my coach or my advisor or whoever I'm training with, they can come in and they can say, Damien, you're not hitting this milestone. What's happening? Why aren't you hitting it? And that month it might be I've been traveling a lot, so I haven't been able to get my workouts in. Okay, so we need to change the workouts so that you can get, it might not be the distance, but we can work on intensity. So how do we change? How do we adapt to what's actually happening in real life? And then we've got to look at how often we measure them, and then what do we do with them? So many firms have reporting systems in place, and they've got these wonderful practice management softwares, but none of them really know what to do with that information. None of them share that information with their team. I would love my team to know that each month my team member, me, Damien Greathead, CPA, needs to be hitting X thousands of dollars of revenue a month, and I know exactly how I'm tracking. That's how I can measure my performance. People want to know how they're doing. They don't want that 6 monthly review of, yeah, well, you did pretty well this year, and we'll bump up your salary a couple of percentage points, but yeah, great job. They want to know on a much more regular basis how they're doing. And this type of feedback is exactly what they need, and it's exactly what you need. Because at the end of the first quarter, if you know you're not on track, you've got to make changes then. It's not going to be 3, 4, 5 weeks after the year ends that we sit back, scratch our head and say, oh, that's where we missed out. So we've got to make sure we keep score. It helps us to know when we're on track. What are we measuring? And then what are we doing with that measurement? Don't measure something for the sake of measuring, because that's just going to consume time. Let's just focus on a couple of key areas that we want to look at. So here's a quick and easy way to keep score. What's the objective? Let's define that objective. Who is responsible for the achieving the goal? It might be a team of people. It might be one partner's managing it. But who's responsible ultimately? Who's going to be involved in us achieving this goal? So this might be where the team is put in place. Then we put a date on when does the goal need to be achieved. Then we look at what are our key performance indicators. What are the ways in which we know we're going to be on track? What are the indicators that say yes or no where we're doing a good job? And then what are the key actions that we need to be doing every day, every week, and every month? And who's going to be doing those? If it's a growth goal, there might be some marketing that every week we need to be doing a number of activities across the firm, and here's who's responsible for those. Every week we might need to be doing a certain thing if our goal is improving our collection. So I think I've got an example here. This one is decreased collections by 10 days. We're currently at 65. We want to achieve this goal by the end of quarter 3. Sandra is the partner that is overseeing this goal, and Beth, the office manager, the administrator, the administrative team, they're involved in this. So our key performance indicator that we're going to be tracking is our average collection days. And every day we need to be cleaning up the really old outstanding debtors, and that's Beth and the partners are involved. So the partners need to be on the phone for the really delinquent people. We might also be looking at what are some policy changes that we need to do. So rather than us following up after 30 days, we move them to green flag profit recovery services. We might need to look at our engagement letters again, just to make sure that our payment terms are very clear and concise. We might need to accept credit cards. And I know that 3.2% merchant charge makes some people balk at the idea of accepting credit cards. But again, we've got to think about the amount of time that's being chewed up by administration and partners and headaches and frustrations by going through this process of collecting money. So every day we need to be looking at who are the outstanding debtors, making sure that we're in contact with those, because that squeaky wheel gets the grease. Every week the outstanding debtors report is to the partners, and then every month Sandra is responsible for uploading the 30-plus days, so anyone that has gone beyond 30 days, to Green Flag Profit Recovery, and then for $10, $12, or $15 they look after the collection process for the next 60 days. It's a pretty slick system. If anybody wants to talk about that, let me know. But what that means is we outsource our collections. The checks still come to us, but for a fixed fee, we can outsource our collection process to Green Flag Profit Recovery. And their statistics are quite impressive when it comes to reducing debtor days and the amount of money collected. I really think this policy change is a really important one. So, for example, all new clients go to automatic billing, onto fixed fee agreements. The engagement letters are reviewed. Again, this really gets us out of that same as last year, this is the way we've always done it problem. So here are the number one pitfall of strategic planning is not sticking to the plan. We spend a lot of time creating this plan and writing it up and presenting it in PowerPoint to the partners, but then it just gets saved away, never to see the light of day again. So we've got to make sure that we stick to the plan. And here are a couple of quick tips for sticking to the plan. Be flexible and adapt. Know that in 12 months' time, some things will have changed, and be okay with that. And be okay with changing and updating the strategic plan on a regular basis. Don't think that this is the plan, and come hell or high water, we're going to stick to it. We've got to be flexible and adapt to what's happening in our own environment, in our own micro environment, and in our own macro environment. We've got to create mini goals. Let's celebrate those small wins. Let's celebrate if our goal of collection days is to reduce it by 10, let's celebrate when the average gets to 5. Let's celebrate. Let's make sure we do those 1-minute praises when people are doing really good things. Let's make sure we praise them there and then, rather than filing it up in the memory bank to come out at the review stage. Let's make sure we correctly identify those smaller tasks. What do we need to be doing on a daily basis? What do we need to be doing on a weekly basis? And then when we are doing those on that basis, what we can do is we can go back and see, okay, we're not hitting our monthly target. Why is that? Let's change those tasks. Be accountable to someone. Be accountable to yourselves, to your partners, to your spouse. If you want me to hold you accountable, I can do that as well. And then we've got to get support. It's a lonely business being a business owner. So let's look at ways in which we can engage with others, online forums, engaging more with other 2020 members, engaging more with us. You're not alone out there, so make sure you do get the right support and get yourself moving in this right direction. KISS principle, keep it simple, stupid. Let's make sure we really define those action items, by who and by when. Again, this is just a really simple way of creating a strategic plan. Lesson from Steve Jobs, focus on what's important, what is most critical, and what will get the greatest return. If you've read his book, it's a really interesting read where they take the high performers every year on retreat to talk about what's going to be our focus. And I know we're running out of time, but very quickly, they do 3, 4, 5 days where they're just talking about and planning and strategizing about how they're going to do it. And then at the end of the day, the top performers, and I think might be 100 or so people, they have to vie for their idea to get on the list, to get on the whiteboard. And so there would be a very heated debate about what are the 10 most important strategic initiatives for our business this year. And we'd get them up on Steve Jobs would get them up on the whiteboard, and it'd be interesting because everybody would have to create alliances and allegiances around their initiative and why it was important, more important than another initiative. And then once they'd finalized the tally of 10, not necessarily in any order, Steve Jobs would say, well, we can only focus on 3, so what are the 3 going to be? And that's what I would stress with yourselves is, what are the 3 things that you can really drive this year? While the list might be 10, realistically, with the amount of time, the resources, it might only be 3 that we can focus on. It might only be 2. So where are we going to get the biggest bang for our buck? What is the most critical, and what will get the greatest return? So very key questions that we need to ask. I've got one last poll just to make sure everyone gets CPE. And this is just a goal just to ask, what is your growth goal for this year? Just share with us what you would like to achieve from a growth percentage. And again, once we put it down on paper, we can then go back and have a look at what that actually means in terms of dollar value. And thankfully nobody's, so interestingly, we've got someone saying maintain the status quo. That's fine. But we've got to be prepared that we will lose some clients, just natural business. So how are we going to maintain that status quo? How are we going to maintain that same level of revenue? What about profitability? Will maintaining that same revenue allow us to maintain the same level of profitability? Cost of business is going up. But again, at least let's put it down on paper and say, how are we going to maintain it? Why are we going to maintain it? Why is maintaining where we currently at? Why is that what we want to achieve? Where are we going to focus our improvement if what we want to do from a revenue space is just maintaining the status quo? So let me close that poll. I'd remind 2020 members, get on board with the annual performance review, 90-minute benchmarking and planning session. We jump on the phone, we look at some of the figures, we compare it to some of the data sets that are out there, and then identify 3 or 4 things that we really want to work on. Free for premium members, comes in at about $500 for the non-premium members, but take advantage of that. You can go onto the website and get started with the questionnaire. And that questionnaire is that first process of analyzing where we are financially and where we are functionally, etc. Interestingly, no questions have come through, so I just hope everyone has gotten some valuable information out of this. I will keep the webinar going for a couple of minutes just in case anyone does have any questions. Hope is not a strategy part 2. We're actually going to be looking at what are some, let's set some goals that some other firms have shared with us, and then some of the actionable strategies as to how we're going to achieve those. So Hope is not a strategy part 2 focuses on, we've done the where are we and where do we want to go. Now we're going to look at what are some of the actionable strategies that we can implement. June 6th, interesting webinar on cost basis and how it helps your firm, how we can do this really cost effectively and really efficiently. And again, identifying the partners, identifying the providers out there that we can partner with to get so much of this work done more cost effectively and more efficiently. That's what we want to help you to identify. June 18, best practices for billings and collections. We'll add more webinars as we go. I've got a number of things to add this weekend, but jump online and check us out. Our seminar program, we've got 8 different programs this year, everything from best practices to accounting technology specific to how to be successful with social media and getting in the cloud. And we've got 2-day programs, 1-day programs, half-day programs. You'll save 25% if you get registered this weekend. Use the code Memorial25. And again, doesn't look like any questions have come through, but if you do have any, please feel free to email them over to me, give me a call. This webinar was being recorded, so I will upload it to our YouTube channel shortly, and I will also get the slides out to everybody in the probably a little later today. When this webinar closes, you're going to be prompted for CPE questions in terms of rating things. Feel free to add any questions there that you have, but make sure you do enter that survey so that we can get CPE sorted out for you. If you have other people sitting in on the webinar, there's a space there for you to fill that section in so that they get CPE as well. But without any questions that have come through, I will, and we've just gone over midday here. Ladies and gentlemen, thank you very much for your time. I hope it was a valuable use of 60 minutes. Any questions, keep them coming through, and please do let me know what we can do to help. Have a wonderful weekend, and enjoy yourselves out there. Stay safe, and we'll see you online soon. Thank you very much, folks.